In this video, we're going to showcase an indicator that you can use to identify super accurate trend reversal points. We're going to show you what this indicator is, the best settings to use, and we'll also combine it with other technical analysis tools to create a super profitable trading strategy. If you find value in this video, remember to leave a like. Let's get into it. So, the indicator that we're talking about is called Enhanced Wave Trend Oscillator. To add it to your chart, you're going to need to go to TradingView, which is the charting platform that I'm going to be using. If you need to sign up, link for that will be in the video description. Next, you're going to select any trading security that you like in any time frame. For me, I'm going to go with the 5-minute time frame of GBP/JPY. Then click on Indicators, type in Enhanced Wave Trend, and select this one called Enhanced Wave Trend Oscillator, created by Eli Cobra. The Enhanced Wave Trend Oscillator is an advanced version of the original WaveTrend Oscillator. It's a technical trading tool designed to identify overbought and oversold conditions in the market. This indicator is used to generate trading signals, and it's particularly useful in technical analysis of the market. Let's break down its key features and functionalities. Now, as you can see here, we have the histogram. Then this upper horizontal level is the overbought level. And this bottom horizontal level is the oversold level. Then this ribbon right here is called the WaveTrend Oscillator. And then we have these dots printed at the overbought and the oversold levels. These are used to indicate instances where the market might be overbought or oversold. Whenever the wave trend ribbon goes into the upper horizontal level, a purple circle like this one is going to be printed. This indicates that the market might be overbought. Conversely, whenever the wave trend ribbon goes into the lower horizontal level and a blue circle like this one is printed, this indicates an oversold market condition. Now, let's access the settings of this indicator so we can customize it to suit our strategy. On the Style tab, we want to disable the histogram as well as the midline. After that, click OK. Now, with the settings of this indicator changed, I know you may be thinking, but how can we use this indicator to trade? Well, it's really simple. We're going to be using it to identify potential trend reversal points based on oversold and overbought market conditions. So like here, the market was oversold, indicated by the wave trend oscillator going into the oversold level and this blue circle being printed. Because of this, we could enter a long position. Then for a short position, it's going to be the opposite. So you would wait for the wave trend oscillator to go into the upper horizontal level and a purple circle to be printed. This indicates a potential overbought market and a higher probability that the market might reverse to the downside. Because of this, we could enter a short position. However, just like any other indicator, this one cannot be used alone. So we're going to need to add one more tool to the chart. But before that, let's talk about HenkoTrade's new partner broker called Fintura. I've been using Fintura for quite some time. As you can see here, this is my live account on MT4. Yes, MT4 is the trading platform used by Fintura. The reason why I think Fintura is a great broker is because of their low commissions as well as spreads that go as low as 0.0 pips. They also have a maximum leverage of 1 to 500. You know, for those of you who love high leverage. If all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $50,000. So if you deposit, say, $5,000, they're going to give you a bonus of $5,000. So in total, you'll have $10,000 to trade with. To access the bonus as well as all the other perks, sign up to Fintura using the link in the video description. Now, back to the video. Now open the indicator search tab and type in Breaks and Retests and select this one by Struts Up Pretty. Then double click on it, and on the Inputs tab, you want to change the MA1 length to 100. Then change the MA1 color to white. After that, head over to the Style tab and disable MA2 as well as the Volatility Stop. After that, click OK. Now, as you can see, this is a 2-in-1 indicator. First, it contains support and resistance levels with labeling for breaks and retests. And then second, it contains this white moving average used to identify bullish and bearish trends in the market. The way this indicator works is super simple. We're going to use the EMA to identify trends in the market. When the price is trading above the EMA, like here, that indicates a bullish trend. Conversely, whenever the price is below the EMA, that indicates a bearish trend. Now, the support and resistance levels in the market are going to be super useful for this strategy. Before we take any long position, we will ensure that the price does a break and retest of a resistance level. Like here, you can see that this is the break of the resistance level, and then this is the retest. So we would enter a long position just after the retest. For a short position, it's going to be the opposite. So you identify a support level, then wait for the price to break below the level, and then wait for a retest of that level before entering a short position. Now, at this point in time, I know you may be thinking, but how can we take trades using these two indicators combined? Well, let me show you. To take a long position, first, the wave trend ribbon should enter the oversold level and a blue circle should be printed to indicate that the market is oversold. Second, at the time the wave trend ribbon indicates an oversold market, there needs to be a resistance level printed by the breaks and retests indicator, like this one. This indicates the presence of a support level on the price. The third condition is really simple because it involves us just sitting around waiting for the market to break above this resistance level. So let's sit and wait. As you can see here, the indicator has labeled this candle as break, which means the price just broke above this resistance level. Condition number 4 is that the price needs to do a retest of this level. Let's see if that happens. As you can see, the indicator has labeled this candle as retest. Because of that, this becomes our entry candle. The last condition is to confirm that the market is in a bullish trend. For that, we're gonna make sure that the price is trading above this white moving average, like it's doing right here. All our entry conditions are met on this candle, so we're gonna enter a long position. We're gonna set the stop loss right below the most recent swing low. Then for the take profit, we're gonna go with 1.5 times the risk. We let this trade run, and as you can see, it hits take profit. Now here's another long position. As you can see, the wave trend ribbon entered the oversold level and a blue circle was printed indicating that the market was oversold. At the exact candle where the circle was printed, we can see that there was already an existing resistance level printed by the breaks and retests indicator. Price later broke above that resistance level and then went ahead and did a retest. This becomes our entry candle. Then lastly, we can see that the market just switched to a bullish trend because the price was trading above the white moving average. Because of all those conditions being met on this candle, we're gonna enter a long position here. One thing to note about this strategy is that if a support or a resistance level disappears before the final break and close, well, that entry becomes invalid. Now, to enter a short position, these are the conditions. First, the wave trend ribbon should enter the overbought level and a purple circle should be printed to indicate that the market is overbought. Second, at the time the wave trend ribbon indicates an overbought market, there needs to be a support level printed by the breaks and retests indicator, like this one. This indicates the presence of a support level on the price. The third condition is really simple because it involves us just sitting around and waiting for the market to break below this support level. So let's sit and wait. As you can see here, the indicator has labeled this candle as break, which means the price just broke below this support level. Condition number 4 is that the price needs to do a retest of this level. Let's see if that happens. As you can see, the indicator has labeled this candle as retest. Because of that, this becomes our entry candle. The last condition is to confirm that the market is in a bearish trend. For that, we want to make sure that the price is trading below this white moving average. All our entry conditions are met on this candle, so we're going to enter a short position. We're going to set the stop loss right above the most recent swing high. And for the take profit, we're going to set it at 1.5 times the risk. Letting this trade run, and it hits take profit. In summary, this video demonstrates a powerful trading strategy using the Enhanced Wave Trend Oscillator and the Breaks and Retests indicator. We covered how to set them up, how to interpret their signals for long and short positions, and the importance of confirming trends for effective trade execution. Now remember, the strategy showcased in this video isn't foolproof. Do extensive backtesting and forward testing before trading with your real money. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.